We are in the final stretch. Election Day 2024 will be here before you know it. And no matter who you support, the outcome of this election will likely have an impact on your portfolio. Foster and Motley's Ryan English has done the research, and he's here to tell us what a victory for either candidate could mean for the market. But I will tell you right now, it is not as straightforward as it might seem. I'm Patrice Sikora. Ryan, glad to have you here today.
Thanks. Happy to be here, Patrice.
All right. So, what are some of the questions you get from clients as we approach this presidential election?
Well, certainly in an election year, the number one question is, should I sell my stocks before the election?
Oh, you mean they don't ask you who's going to win?
Well, I guess not necessarily as much. I think there's a fear that maybe their person they're voting for might not win. So, should they sell their stocks in anticipation of that? And of course, our answer is no. Um,
Mhm.
that's not an investment strategy that we recommend or not one that we employ.
And why shouldn't they sell?
Well, if you look at history, it doesn't necessarily matter which party is in power as president. The stock market has done extremely well over the long run, has been through many good and bad presidents. What the market really likes is divided Congress, maybe inaction or for, Congress and the government to work together in terms of policies.
When you say that, you mean the White House held by one party and Congress held by another?
Yes.
Okay.
Yes, or even the House is held by another or the Senate's held by another. Just so, things have to be crafted a little bit, not necessarily along party lines in terms of ideology, but, more towards the middle of the spectrum.
So, as we're going into this election, what does it look like? What does the stage look like? Um, what is the incoming president going to inherit, at least at this point in time?
Yeah, so no matter who is elected here in November, the president is going to inherit a strong labor market. Still lingering inflation concerns, although more recently the inflation figures have been going the direction that we would want, still below the 2% target for the Fed. Higher interest rates, at least as a starting point right now. There's some indication that interest rates could reduced or cut upcoming here in September, but we don't expect it to be a whole lot. And then, there's still lingering geopolitical risks, whether that's in Europe or the Middle East. Those are things that, are still ongoing.
Right, right. And as you say, we've had good and bad quote unquote presidents, depending on how you want to measure that. But in the long run, really, does the president make a big difference in the market?
The president typically does not. I mean, if you look at the historical stats, depending on when you selected the time frame or chose the time frame to look at, I mean, Democratic presidents do have slightly better returns for stock markets than Republicans. It also matters a lot, what you inherited in terms of the previous administration's performance of the stock market. So you get a lot more credit when the stock market is, underperforming from the previous 4 years, and you're starting at a lower point. But typically the stock market, I mean, you look over the long run, it's been through many things, and it's hitting all time highs. At least the Dow is this week. So there's a lot that has transpired, and good and bad presidents, however you define that, don't necessarily have as much of an impact in the long run.
Well, let's look at the sectors that each president might be more favorable for. Talk to me if we had a Trump victory.
Yeah, and this is a little bit stereotypical, right? I mean, they kind of, put Republicans and Democrats in a box in terms of sectors, but actual policies will ultimately matter. But, typically the number one sector that I think is the biggest differentiator between Republicans and Democrats is energy. And, certainly former President Trump has voiced his pro fossil fuels, oil and gas, for the sector, and his policies can likely benefit oil production. I think that the first move he would probably make would be to, lift the ban on the permits for liquefied natural gas exports that the Biden Harris administration has currently put a moratorium on. But I also will say, I mean, it's tough to define benefit, right? Because certainly from a jobs perspective, from an oil production perspective, I mean, you look at 2016 to 2020, there was a lot of growth in oil. Now, did stockholders for oil companies necessarily do well? Not so much, right? Because the price of oil was driven down. It's kind of pick your poison, right? I mean, there could be more investment in fossil fuels, but not necessarily, benefit the share owners of companies.
But on the flip side, what about renewable energy?
Renewable energy, former President Trump has indicated. I mean, there will likely not be as much investment in that. He's publicly spoken about electric vehicles and some of the subsidies for those, and reducing or eliminating them. So, that is something that fossil fuels would probably be favored over renewable energy under former President Trump.
All right. What else might former President Trump be more in favor of?
Well, defense spending, I mean, is typically, on a Republican platform, right? Increase defense spending, make more investments in there, modernizing our weapon systems, different things like that. Of course, the budget deficit might play a factor in how much defense spending can be increased, along with the existing conflicts overseas. But that is typically a pro.
Okay.
Um,
And I'm seeing here on the list financials, consumer discretionary. Yes, I can see that too.
yeah, consumer discretionary. With respect to tax cuts, any tax cuts that were passed in terms of legislation could benefit consumers. Financials is a highly regulated sector. You got different governing bodies in terms of capital requirements, the loans that they can make, the risk-based assets on the balance sheets. Any sort of deregulation of the financial sector is something that President Trump would look to employ.
Okay. And what about Vice President Harris? Where do you think she might fall?
Yeah, Vice President Harris on the renewable energy side, in terms of climate change, investing in wind, investing in solar power, those would be big initiatives, as well as electric vehicles. That would be something that would be on the docket for Vice President Harris in terms of making those initiatives.
Healthcare?
Healthcare, increasing access is typically, that's what Democrats have always voiced in favor of. Vice President Harris has, spoken to that as well. And increasing access to healthcare for all individuals would be something that Vice President Harris would be targeting. That doesn't necessarily mean that stocks. It's kind of like the energy phenomenon with you know former President Trump and investing in oil and gas, right? I mean, increasing access can be beneficial to healthcare companies. And if you look back at, when Obamacare was passed in 2010, certainly healthcare stocks have done well since then. But it all depends on the structure of it, the access increase, and who actually pays for it.
Let's look overseas. How does the geopolitical situation impact portfolios right now? And depending on who comes into office.
Yeah, I mean, I think there's a couple factors, right? I mean, number one is China, the tariffs that started with when President Trump was running the country, and then has been continued under the Biden administration. I think under Trump, you would have an increased level of tariffs potentially for China. Um,
Mm.
that would ultimately benefit India, likely, which has seen some great growth as well economically and has done well. So that could be some sort of transition. I don't know that Vice President Harris would increase the tariffs any more than they are, just based on what the current administration has done. You look at, Mexico, NAFTA, there's some talk that the North American Free Trade Agreement is going to be renegotiated in 2026. There was an attempt to do that during President Trump. They had
Right,
a new framework together. It's called the US, I think MCA.
right.
Uh, but now you're going to have different leadership in Mexico, certainly maybe in Canada, and that will ultimately need to be, kind of back to the drawing board, and whether that can get through the Senate is to be determined as well. And then Europe, right? I mean, the Ukraine war, the conflict with Russia, that could be a big differentiator. I mean, it's unknown, but Vice President Harris could continue the policy or the stance that the Biden administration currently has in terms of funding the Ukraine army and kind of extending that conflict where, President Trump has announced that, he's gonna try to resolve it fairly soon. Whether he can do that will be determined.
All right. And we also have to remember that if changes are made, it will take some time before they actually have an impact.
Yeah, there's quite a lag typically, right? I mean, how the sausage is made, right? You've gotta get it through the House, you gotta get it through the Senate, and ultimately the president to sign it, and that's a process. There's many problems or, points of conflict that can be encountered on the way or disagreements. So it takes a lot of time to get big legislation through, and then even when it's through, you got to, you know, you got to employ it or actually implement it. And that's another lag, right? And then there's interpretation. If there's taxes involved, there's interpretations by the IRS and different things like that. So what ultimately it's could be down the road before any sort of, you know, legislation or initiatives are felt by the American people.
So, in other words, taking all this into account, don't go changing your portfolio right now just because you think somebody's going to win or not.
That's not something that we recommend. I mean, we do not do that, of course, and, like I said before, there's been good and bad presidents, however you define that, and the stock market has done well under each of them, good and bad. What matters a lot more is the level of employment, inflation, interest rates, economic growth. Certainly, regulation plays a factor as well as legislation does, but it's not as big of a factor for who elects the president.
Is there any point we haven't hit on, Ryan, that you really want to make sure we mention? I think we covered pretty much everything, but we could always miss something.
I don't think so, Patrice. I mean, you won't be seeing any moves in Foster Motley portfolios. Clients will not be seeing any trades based on who we anticipate or don't anticipate to win the election or who controls Congress. So
All right.
we'll maintain our diversification and just continue, let the forecasting be had it for others.
Right. And how can someone reach you at Foster and Motley?
Patrice, I think the best way to visit us is to go to our website at www.fosterandmotley.com, and that and is AND.
Well, no matter which party wins in the upcoming elections, the team at Foster and Motley can help you navigate a path forward. For more life and wealth topics, be sure to follow this podcast so you know when the next episode is ready for you, and please share with others. Thanks for being with us.
Thanks, Patrice.